You got it.
Thank you. So good evening, everyone. Welcome to CB3 Land Use Committee meeting for Tuesday, February 15, 2022. My name is Jackie Wong. I'm the chair of this committee. We are conducting the meeting through Zoom, and our vice chair, Linda, is managing the platform tonight, and she's going to give a brief introduction about some Zoom features and guidelines.
Okay. The first guideline is please use the chat to enter your name so that we have attendance, your name and affiliation, but do not use the chat otherwise. Don't chat with each other. That really is very distracting for the meeting, and we have to put a stop to it if it happens. So that's the first rule. If you want to speak, you should raise your hand. That goes for committee members as well as the public. But remember that when we have discussion, the committee members speak first, and then we open it for the public. When you speak, you will have 2 minutes to speak. Anything else, Jackie?
No, thank you, Lisa. Thank you, Linda. Lisa, can you take attendance, please?
Jackie, can I just introduce just for a second? Linda, could you pin Vincent? When I did it, it took the whole screen.
Vincent needs to be pinned?
Well, because if he wants to ask a question, we need to see him sign so the interpreter can speak for him. Okay, thank you. I'm getting off. Goodbye.
Thank you, Susan. Goodbye.
Can I just add before I take attendance, if there are people present who aren't members of Community Board 3, if they could put their name and any affiliation in the chat for my attendance taking purposes, I would very much appreciate it.
I forget that. Thank you, Lisa, for reminding everyone.
Drives me crazy. Yes, yes. Thank you.
You know, managing a meeting, it takes a lot of people. Thank you, Lisa. Lisa, can you take attendance, please?
Yes, I would be glad to. Jackie, I take it you're here. Yes. Linda, I take it you are here as well.
I am.
Jonathan Chu, are you here? Herman Hewitt, are you here?
Yes.
Thank you, Herman. Trevor?
Present.
Lisa's here. Olympia?
Ciao, here.
Michael Perlis?
Hi, here.
Great, thank you. Damaris Reyes? Anisha Stephen?
Here.
Dominic Berg? Steve Herrick?
Here.
I think Dominic's is here as well. I saw his name.
Oh, sorry, I'm here. Yeah, I was on mute. Sorry.
Great. Thank you.
Thank you. And Anisha is our newest member on the Land Use Committee. I just want to formally welcome you for joining us.
Thank you. Excited to be here.
Thank you. And then thank you, Lisa. Our first item on the agenda is to approve the minutes for our January meeting. So let me know if you if anyone has problem or we just approve it. Okay, I see no hands. The minutes are approved. Second item on the agenda is HPD's HomeFirst Down Payment Assistance Program. So HPD has this program for a long time, but correct me if I'm wrong. I think they increased the subsidy from 40,000 to 100,000 since last September. Since this is the first year CB3 put affordable ownership in the district misstatement, so I bring the topic to our committee. The presenters, Emily McIntosh and Kevin Washington from Housing Work Partnership, are very experienced in this program. I think they have been doing this for so long. They are going to talk about the details of the subsidy and its restrictions. Let me see what else. And I guess that's it. So Emily and Kevin, do you want to introduce yourself and start the presentation?
Yes. So my name is Emily McIntosh. As Jackie said, I'm the Director of Homeownership Education, and we're joined here with Kevin Washington, our HUD Certified Housing Counselor. Actually, we are both HUD Certified. We wear both hats. organization's been around for almost 40 years at this point, and really our mission is driven to preserve and create affordable housing through strategic programs such as homeownership education and counseling. The HomeFirst program is our flagship down payment assistance program for the region. We cover both New York City, New York State, and the state of New Jersey as well. And then actually the HomeFirst program was expanded October 5th. To be approximate. So we knew about it in September, but it wasn't officially formal, and it really has played an integral role in really bridging the gap to homeownership and really reducing those barriers for a lot of consumers trying to purchase within the 5 boroughs. Kevin, you want to add anything in before we?
No, I mean, I think it's a great program, and it's helping a lot of individuals get and move forward toward homeownership.
Mm-hmm. Absolutely. And then we have a presentation prepared to go over the nuances of HomeFirst, really how to navigate that process. Can I get share screen capabilities, please? I think we have to designate me as a co-host. Okay, perfect. All right, so today we're going to talk about HomeFirst down payment assistance program, as well as we're going to tuck in HUD certified housing counseling services as they play a combination with one another. A little bit of background about the organization, just going a little deep dive into it. We're all about strengthening neighborhoods. And we've leveraged over $7 billion in public and private financing for affordable homeownership, whether it be actual units, down payment assistance, affordable lending opportunities as well. And then our key services within our organization are working with developers to further subsidize affordable development, whether it be rentals or homeownership units, as well as we do the affordable housing compliance. So if we're familiar with the Housing Connect 2.0 portal, we have a lot of our developments on there when they are present. At the moment, we don't have any that we're currently marketing. And then Kevin and I run the housing counseling services. We solely work on first-time homebuyer education, pre-purchase counseling, landlord tenant training, post-purchase homeowner education, as well as down payment assistance. And then we have a sustainability arm for about green initiatives, solar, working to keep utility costs low. So we've got a wide swath of programs within our organization. But really we're talking about tonight is our HUD counseling programs with down payment assistance. So this is just a little bit of a more deeper dive. I won't spend too much time on this as well. But really we're here for the HomeFirst program. So in terms of HomeFirst down payment assistance, we get tons of questions on how do we qualify? What is the process? So we've broken down it into basically 9 requirements, essentially. So the first one, you must be a first-time home buyer, and that is somebody who has never owned a property within the last 3 years, has not owned a property ever, or had primary residential ownership stake within a property. So say you co-signed for a family member to help them refinance their mortgage. If it's been within the last 3 years and you're still on that mortgage, you would no longer qualify. If you were to refinance out, we would have to wait 3 years for you to be eligible for the program. As well as number 2, you must complete a HUD-approved home buyer education program from an HPD-approved housing counseling agency. So you have to work with a nonprofit that has both designations, such as the Housing Partnership. On HPD's website, they have a list across all of the boroughs of approved nonprofits. And then there's a minimum borrower equity contribution. So even though the down payment program is providing 20% of the purchase price up to $100,000, the borrower must contribute 3% of the purchase price and their own funds towards the transaction. There's no ifs, ands, or buts about this. And then you must meet the income eligibility criteria, which Kevin will cover on the next slide. And then not only does the borrower need to be income eligible, adjusted for household size, they must purchase an eligible home within the 5 boroughs. It could be a condo, co-op, 1 to 4 family. as well as number 6, the property must be under the maximum purchase price limit based on property type as well as location. So there are a number of items we have to satisfy. And if we're not fulfilling one, then we're ineligible for the grant program. And then number 7, it is mandatory and highly recommended that each borrower obtain a home inspection from a licensed home inspector. This is just even outside of the grant program, but it is a requirement. Depending on the level of assistance, number 8, the borrower will have to live in the property for 10 or 15 years, just depending on the level of subsidy. And then number 9, the borrower must work with one of the participating approved lenders of the program. We cannot work with mortgage brokers. They must go through the lender's retail banking channel. So not everybody participates in this program, but there are about 24+ lenders that we work with. Kevin, take it away.
Yes, HomeFirst terms and conditions. The loan term on this loan, because it is a forgivable loan, you would need to live in that property, as Emily stated before. Depending upon the level of assistance that you receive, you would need to stay in the property, basically reside in it as your primary residence for no less than 10 to 15 years. And again, that level is depending upon if you are receiving anything below $40,000, and at $40,000, anything above $40,000, you must live in the property for 15 years. Anything below $40,000 or up to $40,000, you must live in the property for 10 years. So the terms is not based on the mortgage. It's no interest bearing. It's all around the individual who is applying, or individuals who are applying for the assistance, that they need to reside in that property between 10 and 15 years. And again, depending upon the level of assistance that they receive. There is no interest bearing rate on this forgivable loan, and it's forgiven after you've completed the term, which is either 10 or 15 years. If you leave before your term has been completed, then you will be required to pay back a portion, if not all or a portion of the funds that you receive. And we'll deep dive into that in a second. The loan amount formula is very simple. It's 20% times the purchase price. So if I'm looking at a $300,000 property, I take out my calculator. I say, okay, if I get this property for $300,000, how much would I get from the HomeFirst program? Once, because Kevin and Emily already told me that I qualified, I'm out there shopping. I just need to see right off the top, how much am I going to possibly get from the HomeFirst program? Take out my calculator, 20% times 300,000, hypothetically, that's $60,000. I would be receiving $60,000 from the HomeFirst program. 20% times the purchase price. Very simple, no other math involved. The down payment, as Emily stated earlier, the down payment minimum requirement has to be out of the borrower's own funds of no less than 3%. Anything less than that, then they won't be able to apply for the program. Now, let's say they're going into a cooperative, and the cooperatives require 20%. As long as they put down 3% of their own, if they can negotiate with the co-op to have the rest at closing of that 20%, then fine. But it has to be 20% of their own funds. It cannot come from gift funds or any type of other assistance from lender programs or of that matter. VA loans are accepted, and it requires 0 down, because as for veterans and active veterans and family members, as long as they're approved with their certain documentation to prove such. So a quick example of a scenario of how much, and I said it earlier, $300,000, they put down $30,000 as a down payment, because you need your down payment funds in the beginning in order for you to get that contract. Please note, the funds that you're getting from this program comes toward the end of just before you get ready to close. It doesn't come in the beginning. So in order for us to get to that end, you need your down payment in order for that seller to start the contract, because without a contract, your lender can't start the loan. And if your lender can't start the loan, we cannot apply you for any assistance. So yes, even though this program is called Down Payment Assistance Program, primarily the funds will be there to assist you with your closing costs. And if there's any leftover funds, then the bank will then move that the leftover funds on top of your down payment. It's a win-win because think about it. You already put down a certain amount of down payment money, let's say 3%. Let's say you get $60,000, your closing cost is only $30,000. Okay, your closing cost is already gone. You still got $30,000 left. They'll take the other $30,000 and put it on and add it onto the down payment that you've already gave. Now you've done lessened your monthly mortgage payments considerably just by that add-on. So even though it does say down payment assistance, it does hit the closing costs, and if anything left over, it goes on to the down payment. No, you will not get a check personally directly to you. These funds are toward acquisition of the property only. And the bank then, like I said, they'll decide how to move those funds to where it will better assist you. Again, this is a loan forgiveness. So like I said earlier, the HomeFirst loans is between anything at 40,000 and below, it will be reduced 20%. So how it's forgiven is the first 5 years of after you closed on your home, the first 5 years, the entire amount that you receive is all there for that first 5 years. They do not start breaking down 20% increments until starting at the 6th year. So every year after the 5th year, 20% increments will come off of what you borrow. Then obviously fulfilled down to zero, like a positive amortization in a sense. If you leave that property, let's say after the 5th year and at the 7th or 8th year, you would not be owing back. You would not have to reclaim or give back rather HPD the full amount. You'll give them back the amount lesser than the amount of years that you've been there past the 5th year. You know, they'll take up the increments from that. Anything above 40,000, then your term is up to 15 years and you must live in that property for then. And if you move out of there after the 5th year and any time between that, you'll be paying or giving back a portion of what you receive. So it's a great program, and a lot of people has benefited from it.
Great. So now hold on, I have to get my bearings here. So the HomeFirst program income eligibility. So when we're looking at income, we're looking at the home income limits. And right now we're in the peculiar time of the year where we're still looking at the 2021 income limits. 2022 is slated to come out anywhere between April to June of this year. So we're anticipating that they will go up. We just don't know by how much this year. And so it's adjusted based upon household size. So if you're a single person, we're looking at a maximum income limit of $66,850. We're looking at the gross pay for W-2 borrowers. And that also includes benefit income, SSI, Social Security, all of that is included in that gross wage. When it comes to self-employed borrowers, we have a little bit more flexibility and play with the numbers as we're looking at an average of the last 2 years tax returns, net income, plus a current year-to-date profit and loss statement projected forward. And with self-employed borrowers, we have to do a little bit more legwork in terms of qualification and getting them ready. Because if we do have negative income for 1 year, the income for that tax year is considered zero, which will impact your ability to qualify for a mortgage. So this is where we are as of June 1st, 2021. And like I said, they will go up later this year in the next couple of months. Okay. And then on top of the income limits, we have purchase price limits. We have two sets of purchase price limits. They're existing homes and new construction. 90% of our consumers are buying existing properties, which are currently occupied or being resold. This is somebody who has lived in a home. And like I had said in the earlier part of our presentation, not only do we need to be income eligible, property needs to be eligible. And it's adjusted based upon county and property type. So 1-unit properties, those are condos, co-ops, townhomes, and single family homes. And Kevin loves to point out that we do not look at the number of bedrooms. We get this question a lot. We do not look at the number of bedrooms. So if we're buying a one bedroom home, you can qualify for HomeFirst. We're looking at property type. And then the 2 and 3 units, those are our multifamilies. So if we're looking to stay in Manhattan, which is New York County, we can go up to a maximum income limit, maximum purchase price limit of $558. Anything above $500,000 is getting the maximum $100,000 grant. We're not giving anything beyond that. It's the lesser of the 2 calculations. And these purchase price limits are effective as of June 1st. So usually we get income and purchase price limits within weeks of each other every year. And then so not only do we have existing purchase prices, but also new homes. They're slightly higher, but they're the same across every borough as well. Like I said, the lion's share of purchasers are buying existing homes. Kevin, take it away on participating lenders.
Sure.
Kevin,
I'll
if you
go
could
first.
hold for, Kevin,
Sorry.
if you could hold just for a moment, the interpreters are going to switch.
Okay.
So we just need to make sure that the deaf client can see the other interpreter.
No problem.
So not sure if he can see us or not. I apologize for
No problem.
the pause.
I think he can.
There we go. Thank you, everyone, for your patience.
No problem. Well, thank you. The HomeFirst participating lenders, as Emily introduced me into, the approved lenders are listed on here. These are lenders that myself and Emily and Housing Partnership have very good connections with. And what me and Emily will do is when you come in for your one-on-one, well, not physically, we'll be doing a Zoom one-on-one meeting. We will be reviewing your financial situation to determine which one of these lenders will best suit your needs. So it's not so much about them being approved for the HomeFirst. We're still looking at the lender that best suits your financial needs as well. And we'll be able to connect you with that because, again, we just want to make sure that depending upon the type of property that you're looking at buying, be it a co-op or a condo or one or multifamily, we want to make sure that we connect you with the lending institution that really does good moves when it comes down to those particular properties and obviously knows the program quite well. And just to back up just a little bit from as far as go for the eligibility when it comes down to income limits and purchase price limits and stuff like that. Once you get the property and you have the keys in your hands, you do not have to be into any eligibility stage, meaning you can make all the money you want, you can get all the jobs you want, you can be income over, it doesn't matter. But we need to stay eligible until you get the keys in your hands. After that, you can move people in, move people out. Your only requirement is that you live in the property for the set amount of years based on the amount that you receive. So these are the lenders here. The loan restrictions are mortgages must be obtained through a licensed, recognized lending institutions and approved participant in the HomeFirst program. We do not they do not allow brokers, and which is good. You know, we wouldn't want our clients to have to, you know, you're already spending money on a lot of other expenses like closing costs, down payment, attorney fees, inspections, and now you're going to pay a broker. That doesn't work with us. So we advocate we introduce you directly to the institutions, and that's where you'll be getting your mortgage through. The program does not accept no doc loans. Okay, just to be clear. So, and that's one of those things where you get on the phone and say, I make this set amount of money. That's not the way it's going to work. There is no 100% finance. Again, like we said earlier, you do have to put some meat in the game, and that meat is 3% minimum out of your own assets. Except for VAs, if you're a veteran or a family member of a veteran, there is no down payment necessary. No interest-only loans, no ARMs, adjustable rate mortgages, things of that nature. So again, we're talking strictly 30-year mortgage loans, period. Mortgages, no income check mortgages are not permitted, non-occupying co-borrowers. So if it's me and Emily that are buying this property together and we're both on the mortgage and we're both on the title and the commitment and the contract, me and Emily are required to live in that property for the set amount of years that is based on the requirement. So it couldn't be like, you know, Emily, you know, we buy the home together and then Emily go live someplace else. That's not the way it's going to work with the program. No co-signees, grantors are not permitted. Mortgage loans must be originated through the lending retail channel.
Absolutely. Absolutely. And then I want to make one note here. Effective February 11th, Santander Bank has ceased mortgage lending operations, so they will be coming off of this list.
Right. And it happened so fast, we didn't even get a chance to update our deck here. But
Yeah.
that just happened about a week ago, believe it
Yeah.
or not. So it happened suddenly, and this is global. Santander is no longer originating mortgage loans. They're still doing banking and checking, stuff like that, but no originating mortgage loans anymore, including refinance.
Absolutely. So now if you're thinking about how do we get started, or how I know people or myself that could benefit from this program, we do offer 2 educational workshops. One is our more 2-hour deep dive Home Buying 101 down payment assistance, where we talk not only about the HomeFirst program, we talk about our statewide down payment assistance, some of our specialty grant programs that are coming to the market this spring, as well as New Jersey programs. These workshops are free of charge, and they're available online at our website as well. And then
The workshops that we're introducing you to here, this is not the educational class.
Yeah.
This is just a more deep dive, informational workshop on what we're talking about here, but a lot more deeper in where we are now. We don't want to take up all the time, but this is strictly just a workshop. The educational class is needed in order for you to apply for that.
Right. And then I do believe we are currently fully sold out for all of March dates. So we do have availability starting April. And then if we're ready to take the next step and say, I want to apply for this program, or to determine if I'm income eligible and next steps, or I just want to get the mortgage process starting, we have our certificate course through eHome America. That is our online education platform. It's available both in English and Spanish. It is at your own pace, on your own time. And then once you complete the course, both Ken and I are notified, and then we'll get you set up for the required one-on-one counseling for any of the various down payment assistance programs. It's not just limited to HomeFirst, it's all of them, plus a majority of the first-time homebuyer mortgage programs that are available. And it's available through eHome America /housing partnership. This is also listed on our website as well. And certificates are valid for 1 year from the date of course completion. If we do have longer term clients, we will continuously work with them to get them ready for purchasing, and then we'll renew the certificates on an ongoing basis as needed. And then here is our contact information. And then if you scan this QR code, it'll take you straight to our website with all of the information we've covered tonight. Okay, I'm going to stop share screen. And if there are, I can always put it back up, but if there are any questions.
Yes, committee members, Trevor, Dominic, Olympia, in that order.
Oh my
Trevor.
goodness. I guess who wants to start?
Oh, Trevor, you're gonna start first.
Yeah.
Okay.
Thank you for that presentation. I just have some quick questions, and I know this wasn't a deep dive, but I think this is just general questions. Is there a maximum amount of down payment that you can put?
From the borrower down?
Yes, if suppose I want to put more than the 3%, or I want to put 40% or whatever.
Yes.
Is that allowed?
Yeah, you
Is
can
there
put more than the 3% down. However, we are running into some situations where with borrower down payment plus the down payment assistance, we're running into minimum loan amount issues right now. So if you are putting a sizable amount, we have to make sure that we're in line with the minimum loan requirements per the lender to participate with the grant program. You can do what a lot we're seeing right now is borrowers who are putting down 10% of their own funds. They're using the grant funds in conjunction to have a combined down payment of 30%. Or they're doing 20% down of their own funds plus the grant for 40% down. So we're really seeing a lot of larger down payments, really driving down the mortgage loan amount, which is tied to your monthly mortgage payment, especially with the interest rates on the rise at this moment.
Which leads into my second question: is there an asset limit on for qualification?
There is no asset limit. However, if there are outside deposits outside of payroll, $100 or more, we have to demonstrate where those funds came from. So if you're receiving a gift or you're transferring funds from brokerage or retirement, we need to be able to document where those funds came from.
Now, you say you must take out a 30-year loan. Can you refinance that loan right after you qualify for the program?
So you can refinance with the program. We're only permitted, the HomeFirst program only permits cash out refinancing. So, I mean, not cash out refinancing, I'm sorry. We do not permit cash out refinancing. We only permit rate and term. So if you're adjusting down for a lower interest rate, so say you close tomorrow at 4.25 and a year from now, the interest rate is 3%, you can refinance and we'll subordinate the grant. So that way you don't have to repay it.
Understood. And last question, you say you have to stay in the home. What if you're a couple and you get a divorce?
Okay, so with that, it would be, that's a case-by-case basis. With those situations, we would have to, HPD would have to assess who's receiving the property due to divorce, you know, all of that. So that's really a nuanced question for HPD that can assist with that.
Okay, thank you.
We'll definitely have to talk with, bring that
Question, Trevor.
Stands to HPD for sure.
Yeah.
Next we have Herman. Yours is a hand or is that a question?
It's a question.
Okay, I'll let Dominic go first. Dominic, Olympia, followed by Herman.
Okay. Really, it's just a couple of clarifications. So on the income limits, I noticed that the 1 and 2, like 1, I think it was a minimum of like 66,000, and then for 2, it was like it barely went up at all. Am I reading that right? That it wouldn't be like 120. It's not like double for 2.
No.
So that's kind of assuming like either I don't know, it's odd to me. Like people have a $66,000 job. That's like a standard, middle income kind of job. And then the next bunch of people basically barely can have a job. So I don't really understand the benefit there or how it's even possible. And then I was wondering, just clarifying also, for the maxes for the counties, like for one unit in Manhattan was $550 something thousand, right? So that's like maybe you could 558 is in. If someone finds an apartment that's more than that, can they still use the program?
So to answer your second question first, if the purchase price is above the maximum limit based on property type and borough location, you are ineligible for the grant program. And then to answer your first question about income limits, so we are funded by the grant program is funded by Home, which is targeted to low to moderate income individuals and households earning less than 80% AMI. So there are a number of AMI scales floating around. And those are the maximums. We do not have a minimum income to qualify for the program. We only have a ceiling. And like I said, we're working with 2021 income limits. We are eager to receive the 2022 income limits. We do have a number of purchasers who are actively using the grant program and closing with them. Kevin, do you want to add in anything?
As a couple, absolutely. There are individuals that are making below the income limits. But yeah, unfortunately, until the mid-year, like Emily was stating, when the income limits are readjusted, those are the income limits that the clients are working with. We've been closing quite a bit of individuals, let alone this year.
Yeah,
I think we went through, at least with the program, over 25 to 30 individuals within the last few weeks.
Yeah.
Yeah, I could see the individuals. And then I guess it's more like moderate income for individuals, and it's low income for potentially for couples and families is what I'm guessing the target is, or the market is.
So the targeted income, so it's the 80% AMI, those are low to moderate income households. So that's how HUD views the income limits. So anything between 51% AMI to 80% AMI is a moderate income individual or household. Anything between 31 to 50% is a low income household individual, and anything below 30% is a very low,
right?
Very low income as well.
Thank you.
Okay.
Olympia.
One of my questions was going to be the divorce, and I was thinking, a little bit along the lines of Dominic, how this can help families, right? New families. So for instance, in terms of eligibility, if someone had a studio as a single person and now they're married and they have a bunch of kids or more, are they now excluded because this is not the first time they're buying a house?
So when we're looking at eligibility as a first-time home buyer, so say they did own a studio 3 years ago, they disposed of it 3 years ago, they become a first-time home buyer again in the eyes of the home program for HomeFirst. If they owned a home while they were married and the applicant gave up that home in the divorce, they automatically become a first-time home buyer without the 3-year requirement. But we need to have the divorce decree.
Yeah.
And
the divorce was answered, but my concern is right now especially in this district, I know so many families with kids that live in studio apartments, and so they cannot dispose of it for 3 years in order to upgrade.
Yeah,
right?
We're looking at the 3-year mark.
So this is, I think, a huge problem if this program is at all considering helping families in New York. And then the other issue, because of how crazy the market is, are people supposed to sign on the program before they start looking? Because what is happening right now, you start looking for properties and then they're gone before you even basically. And so how do you address this problem that is very present in our market?
Right. So one of the ways that we're getting creative to give borrowers a boost up in the market is how we conduct our eligibility. So we do all of the eligibility screening upfront before we provide appropriate lender referrals, because we're ensuring to the lender, yes, they are income eligible for this grant program. Please include this when they're underwriting the pre-approval to boost their purchasing power, knowing that the grant is to come in, to really structure that it really gives them more options, as well as we're communicating more and more with real estate brokers about how to structure the deal sheets of what funds are coming from what. So we've had to evolve with the market, and the market is evolving every day. What was relevant yesterday is going to be irrelevant tomorrow. So we're really going with the motions at this point. Kevin, you want to add anything?
It's all about the upfront review. And again, I agree. We don't want the client to lose that opportunity. So we definitely want to review that client up front to let that client know, okay, you are eligible and this is how you have to stay. So we have to make sure that they understand that. We just don't look at them and say, okay, you're eligible, just get out there and start shopping. And then all of a sudden they start doing things with either their credit that will affect the loan, or with their finances that will affect the loan and the grant. So once we give them that triage per se to let them know exactly where they are, we connect them right to a bank and get them out there. And now, like Emily says, they're walking with a lot more fire. Now they know that they're eligible. They know how they need to stay and behave financially in order to be able to continue to be eligible until they get that contract. So we try to stop that lull from occurring where we don't want them to lose that opportunity. So they come in real quick, we'll zoom in real quick, we look at them, we let them know where they are, we tell them why, and then we connect them and get them out there toward the shopping process.
And I also want to add that we're also stacking multiple programs together for a number of borrowers. We do have additional grant programs that are available. whether they're through the state or through the lender itself. So we're stacking multiple programs together to really give buyers an opportunity in the market at this point.
For state, are you talking about Sunny May? Or
So we have Sony May, we
Yes.
have lender paid closing cost assistance from a number of lenders that we're working with, as well as we have some grant funds that are coming in this spring from the Federal Home Loan Bank of New York, which those are limited time only funds. Our Federal Home Loan Bank dollars are geared towards kind of like our moderate middle income borrowers, the ones who are just ever so slightly over for HomeFirst but still need assistance. So we have dollars for those households as well.
maybe we can bring you back next time for those programs.
And it would be great because actually that program is launching at the end of March and we're waiting for our new income limit. So they're not ready just yet for that
Okay.
program, but it's
Herman. Herman.
Hi,
Interpreters.
Jackie, if
Yeah.
we could, the interpreters are just switching quickly. I'm sorry, Herman, for the interruption. Just a second, Vincent is looking for Genevieve. There we go. Thank you so much.
Thank you, Chris. Herman.
As a person in the real estate business, I have tons of questions, but I just want to
Two or
ask
three.
I just want to ask just two. One of them is, would the financial agency allowed to sell the mortgage on the open market before the 10 or 15 years?
Oh, so if they're transferring to like their servicer or they sell it to another, that's acceptable. That's acceptable. If it changes servicers, I know Citibank does that as well, that they automatically sell it straight, they transfer it over to their servicing arm. That is permitted. They're really, HPD is very silent on that. But the original mortgage must be originated by one of the participating lenders. And if it transfers servicers, it does not need to be repaid. It doesn't trigger anything.
I know HBC does that regularly.
Yeah.
And at this point, they are transferring a lot of their products to Citizen Bank.
Yep.
Yeah, the other thing is, if somebody enters this program and say it's a single person with a child, not another adult, and they happen to pass away, can this property be administrated and sold?
So it can be, so if the property is left to any of the heirs, they can still occupy the property. But if it is going to be resold, if it's going to be sold before the 10 or 15 year period, then the subsidy has to be repaid based on the term remaining.
So it's like
Unless there was a person that was already written on, right? If there was someone that, like, let's say there was a will or a person was on title, what will happen is if that person with the legal individual who actually borrowed the money passes away, before the bank swoops in to say, okay, we're taking the property back. Obviously, if you have someone on title, then they're going to hit that person first. And that person on title then, as you know, will have to prove to that lender, if they want to keep that property, that they are financially able to continue where the other individual who had deceased left off. If that individual is not able to do so, then obviously in a legal standpoint, and I'm not a lawyer, then there will be situations to where then the bank will come in and do whatever they have to do. And yes, as Emily just got finished saying, the obligation of the terms for that program will need to then be repaid.
Right. We've had a couple of situations where they've left it to their children and they'll go back to the original application. HPD keeps all of the applications for the total of the term. And they'll go back to see if that household member or that dependent was listed on the application. And if they were, then they'll assume.
Thank you. Michael. Mike?
Yep. Hi. Thank Thanks for the presentation. My first question is I'm trying to understand like the down payment required from the individual versus with the assistance. So most properties you can't buy a house with 3% down. So I'm just trying to understand like if I have $10,000 in my bank account that I can put towards a down payment, does the bank see that as 110 if that's how much I qualify for with down payment assistance, or do I have to qualify for the mortgage with my own personal funds, and then hopefully the down payment assistance will get added at the end?
So it's somewhat of a combination of, so HomeFirst requires that you have a minimum equity contribution of 3% of the purchase price. However, most of our consumers are coming to the table with 10, 15, 20% down. The low end we've seen is 5%. And that's kind of like on our 1 to 4 family scale. So the bank will, if we're trying to qualify for maximum purchasing power, they'll include not only your funds, but also the potential grant funds. But remember, you cannot receive the full 100,000 if your purchase price is less than 500K, because remember, it's a formula. It's 20% of the purchase price, not to exceed 100K. So if you're qualifying for, going back to the $300,000 example, if you're putting down 5 or 10%, you have to put your contribution down plus the grant funds. When it comes to condo and co-op, it's really having a strong real estate broker and real estate attorney negotiating for you. We have seen some instances of 5% down on the rare side, but really everybody is putting 10% down at contract signing on a condo and co-op, and then the rest is due at closing. So for our buyers that are required to do 20% down, they're doing 10 down of their own, and then the rest is coming in from HomeFirst. Kevin?
Yeah, I mean, that's it. That's basically the
Yeah.
bottom line. I agree with that.
Okay, yeah, I mean, I think in this district, most homes, most 300 square foot studios are more than 500,000 anyway. So, so my main question is how, you said there was no asset caps or limits, and with affordable homeownership, like through HPD's lottery system, there is. I used to work for HPD, I no longer do, but I would see personally people who would technically qualify on paper. And this is similar to an issue that Bloomberg recently highlighted about HDFCs. I'm a low income young person, but my dad is like a Saudi oil prince or like a partner at a law firm or something, and can put $300,000 in my account, but I work at whatever media agency and make 50,000. Would I still be qualified for this, and could I slip through the cracks and get a HomeFirst loan and be able to use this program, even though I do have, maybe I have $1 million in assets in my bank? I would still technically qualify as long as I meet the income requirements and the other 11 requirements that you outlined?
So in this instance, technically they could qualify. However, with any outside funds that are deposited within the last 90 days, we have to provide an explanation of where they came from. And that's not only for the HomeFirst program, but that's also at the banking side, the lending level. We need to document where any outside deposits came from outside of payroll.
But if it was 91 days ago, if I had $1 million in my bank account, just from my trust fund.
Yeah, if it's been in there for more than 90 days, it's considered a seasoned asset in the eyes of HomeFirst as well as the lender, and there really are no questions asked about it. That's one of the nuances where the HomeFirst program is funded by Home, so it has its own separate requirements and regulations that it follows. And HUD is of the gray area. Really, it's up to the PJ, the public jurisdiction, to set forth their terms and requirements for the program.
Yeah, because even I saw at HPD people who both had money transfer, and so I know, yeah, it's a federal issue, it sounds like, but yeah, if there's any guardrails we can put up or advocate to put up for that. I think that would be really helpful, so that, you know, the people we're helping are the people most in need and not the people who, you know, can navigate the system correctly.
I'll give a good example real quick, Emily, like the one where we had a young lady that had cash in a safety deposit box. So at that point, she informed us as her counselors that she has access to that. So obviously she has to, well, we know that there's some legal ramifications with having cash in a safety deposit box, but we just let her know that she would have to take that cash and she would have to deposit it into her bank account. An active bank account, and it would have to be seasoned. Seasoned meaning basically that the funds would need to be in that bank account for at least 3 rotations of statements, 2 to 3 rotations of statements, to show that that money just didn't pop out of nowhere. It's there, the bank and everybody's been seeing it. And not only will Home say no problem with that, but the lender will be okay with that as well. And again, that with the $1 million, there's no asset requirements on this, but again, we see a lot of movement in your bank accounts. We would have to do a line by line just to explain it. Like, you might have received $1,500. Where'd you get that from? Well, I loaned you right in the box. I loaned a friend some money and he paid me back. Stuff like that. Something as simple as that. Or I came across some winnings. I deposited $50,000 because I did a scratch off. You know,
found that
but if you don't have that kind of movement. Again, and again, it also goes with, let's say you're only showing the bank 2 different bank statements, right? So you showed the Bank of America, you got a checking account, you got a savings account in MCU. That's the only thing that's being reported. But you have another bank account to where you're depositing and you're doing all your transactions but that's not, you don't have no funds coming out of that into this main 2 accounts, nor do you have that going into that. So we don't need to know about those bank accounts at all. We just need to look at the bank accounts that are being recognized through the bank size, as long as there's no transition from whatever you got going on in that. So if you are moving a lot of finances around, then put it in a whole different account that doesn't have nothing to do with the accounts that is being involved in the transaction.
We've experienced a lot of situations with this grant program. We have pretty much seen it all until we haven't.
Trust me on that.
Damaris.
Hi. So you may have covered this, but I may have missed it. I joined a little right before 7. So there are no asset limits, but what about purchase price limits? So I know that you're saying that it's 20% up to 20% down. And so does that up to 20% down, and you may have also covered this, does that mean that the program only offers a maximum of 100,000, because that's the example that you used? And then also, what is the maximum purchase price that someone can bring to you all? And then I have one more question.
Okay, so we're gonna roll it back. So the grant program provides 20% of the purchase price up to $100,000. There are maximum purchase price limits based on property type. So condo co-op, 1 family, and then also multifamily, so 2, 3, 4 units. And they vary from borough to borough location. That information is also listed on HP's website as well.
So let me, before you continue, to make sure that I'm getting the answer that I need. So you saying that I should look on the HPD website to look up this neighborhood, let's say, or a neighborhood that I'm interested in, to see what the maximum purchase price of this program would allow?
I can show you.
Pull up the slide.
Yeah, I can. I was
Slide
going to say,
again.
let me pull up the slide real quick. Give me 1 second. So, and actually we are right here. So these are the maximum purchase prices for each of the boroughs. So it's not by neighborhood, it's by borough. By borough.
Yeah.
So if we're looking to stay in New York County, in Manhattan, we're looking at New York County. So these are for existing for existing homes. So if you're doing new construction, then we have a different set of purchase price limits.
So it's not neighborhood, it's by county.
And then all of this information is also listed on HB's HomeFirst website as well, like just to give you as an additional resource. This is just a little bit more viewer friendly than what they have available.
And just to add, so that this way you don't think as though, well, when I get up there and I'm starting to shop, Do I have to stop and then ask individuals, can I get this property? No, not at all. All we need to know is what borough are you looking at wanting to buy in? So if you're looking at Staten Island, where I live at, and you're looking at buying a co-op, a condo, or a one-family house, be it that one-family house is connected, attached, detached, whatever, that one-family house on Staten Island, the purchase price existing cannot exceed $521,000. And I just want to be one thing clear, when you had stated 20% down. No, the program is saying they require that you at least put 3%.
No, I didn't say that. What I said was that you said it's a 20% maximum. I know that it's
right,
a minimum of 3% down. I'm clear on that.
My mistake.
It's
But I have a
20% of the
follow-up
purchase
question.
price.
Yeah, no, you guys have answered that. Thank you. I just have a follow-up, and in the interest of time for the other committee members, I don't want to take so long. So you talked about like the way in which assets in the bank and your bank account can't be newer than 90 days, or you have to provide an explanation. So sometimes in these instances, when you have low income families, they may borrow money from their family, or they may get contributions. So let's say you're looking at their account and you see, you know, $10,000 worth of money that's come in from family members. So long as they're able to say, hey, yeah, no, that was my cousin who gave me $5,000, you know, or my mother who gave me $10,000, and they can prove that. Is that enough? Or does that disqualify them because they got, you know, this money from other folks?
That does not disqualify them. What will happen is the lender will require a gift letter form to be completed, and then they'll have to demonstrate how the funds were deposited. So if it was by certified bank check or a wire transfer, or if it was a cash deposit, we need to show the donor's bank account that they have those funds, showing the withdrawal to match the deposit into the applicant's bank account. So as long as we can trace where the money came from, that's perfectly acceptable, because the bank will collect the appropriate information, and then that's what we use. So we use the gift letter forms and all of those.
Great, thank you.
I'm
Very
gonna ask-
common, very common. We have pooled resources together. We duct tape a lot of deals together.
I'm going to ask a question, and then Olympia ask the last question. So I always think that Manhattan has the most expensive real estate in the city, but it looks like Brooklyn has surpassed us. I look at the table you just showed us. So the purchase price cap for Manhattan is at $558,000, and it's quite low, to be honest with you. So you are looking, I mean, if you are talking about Manhattan, you are looking at a studio or a small one-bedroom co-op or condo. And I have, so before this meeting, I have checked with Seward and Human, both Seward and Human Co-op, they both don't take this program. They are both co-ops. So I'm just wondering, like what is the utilization rate in Manhattan? I can see it can be more utilized in Queens and Brooklyn. And I don't know if you have the data, but I'm just curious, like, from your general experience.
So that's a very good question. So we do have, so Brooklyn is very expensive, and actually we're seeing a lot more utilization of this program in Manhattan. It's usually happening right now in Upper Manhattan as well. That's where like the bulk of it is, where we're seeing a concentration. And we do have some stuff that's concentrated in the Lower East Side. And then Queens is very active at the current moment, but we're seeing affordability issues, not only in Brooklyn, but also within the Bronx as well. And then we've seen an uptick in Staten Island purchasing in the last 18 months. You know, we would be lucky if we got one Staten Island transaction per year. And now we're seeing people they need more space. So where are they able to find space? And then I want to address the purchase price limits. So the purchase price limits actually went down for New York County for 2021. They were actually higher in 2020. And how this data is put together is based on the prior year's purchases for all of 2021. So since we had a very interesting 2021 year, it'll be interesting to see what places go up what places go down based on the year that we had last year. So it is a look back from the previous year's sales.
Okay, and you just mentioned that you have seen some transactions in Lower East Side. Can I ask you, I don't think this is like confidential information, but I'm just curious, like where are these properties located? Do you have any, like, are they co-ops or condos? Do you have
They
any
are
idea?
all co-ops.
Okay.
So we're predominantly co-op and single family at the present moment of what we have in pipeline. We do have a couple of condos that are coming in, and then not very many multifamilies. But actually, I have.
It's very interesting because I have reached out. I mean, Grand Street, I'm not sure if you are familiar with our neighborhood. Grand Street has a lot of co-ops, and I have reached out to 2 major co-ops before this meeting, Human and Sewer Park, and they don't both of them don't take this program. I guess this is going to be a second lien placed on the original mortgage, so that's why they don't take it. And that's why when you told me Lower East Side also has a lot of transactions, I was like, this is very interesting. It's different from my own background research, so I want to know where are they located.
I can absolutely share post meeting
Okay.
the buildings or the addresses that we have available that we've closed in like the last 24 months, which is really relevant.
Thank you.
And that way we can kind of pinpoint. And yes, it is a second lien against the shares, which sometimes turns off a co-op board. So having upfront conversations with our real estate partners about how do we shield the buyer from, like losing their offer because they're receiving down payment assistance. We've really had to get very creative. Before, when the grant amount was $40,000, it was easier to shield. But now it's $100,000 and people need this $100,000 up to, we have to disclose it up front. And what we're actually doing is when we're submitting our files, we're doing them early. That way we can get the grant approvals in before they go to co-op board interview. That way we've said, here is your commitment of funds. They are guaranteed once you receive board approval, and we can schedule a closing within 10 business days of your board approval.
Thank you. This is a very interesting topic, but we also need to be time sensitive. So I want to close this topic by 8 o'clock, or maybe 7:45.
Oh, come on.
No. Is that too much?
Yes.
Okay, so let's try to close. Okay, Olympia, Trevor, Damaris, we have to finish this quick, okay?
Mine is super quick. It's just that because of that table of maximum amounts that you said, this is one more way in which you penalize families, because the Grand Street co-ops that Jackie mentioned, if you need 2 or 3 bedroom because you have 2, 3, 4 children, like not even to give them each a room, you go much above your maximum. So there are various ways in which this program, I think, doesn't help families. So if you have a possibility of creating something better for them, that would be great.
I know. I wish if Kevin and I were king and queen of the day, we have so many ideas. But stay tuned for next for the 2022 purchase price limits. We're expecting them to be significantly higher based on last year. So one can only hope. So stay tuned.
Right.
Trevor?
Mine is real quick. Is the pot of money that you have unlimited, or do you have a certain amount of funding?
So let me put it to you this way. We're spending money from 2018. So each public jurisdiction, PJ, receives a certain amount of money every year from the federal government. And one of the reasons of why they increased the grant amount to $100,000 was to spend the funds faster, because there are time limits on when each PJ has to spend these funds. So if they don't spend them within their allotted time period, they have to give them back to the federal government. And who wants to give money back? Because that reduces future allotments every year. It reduces the amount that they would receive. So with the increase, we've been able to really spend the money. I would say roughly there's about $150 million in the pot of funds. So it's not going anywhere anytime soon.
Thank you.
Maris, you are the last one.
Jackie, if we
Yes.
could, we're just going to switch interpreters very quickly and make
Okay.
sure that Vincent can see me. Okay, thank you so much.
Thank you, Damaris.
Yeah, I just have two very quick questions that you may have answered, so feel free to tell me and I can find the answer. One is, you said that since you're stacking different grant programs, does that mean that if somebody has a Section 8, which some folks have been encouraged to use their vouchers to purchase homes, that they can use their Section 8 voucher? And then the second quick question is, are there any credit score limits that, or what is the credit score limit? And I asked this question because when HPD established their housing lottery, they had credit score limits that prevented people from being eligible for the housing lottery. So I'm just wondering if there are credit score limits here as well.
Okay, so those are two fast questions. So credit scores, we have a minimum credit score of 580 per our HomeFirst term sheet. However, really, mortgage lenders are looking for 620 and above is where they're really looking at, but the program says 580 is the minimum. And if there is more than one borrower on the mortgage application, both of them need to be at the minimum threshold. And the same thing would go if they're applying for mortgage financing together, they would need to meet the minimum credit score criteria if it is higher than HomeFirst, whichever one is the more restrictive. And then in terms of Section 8, right agency that we do this program. So we do the Section 8 to homeownership conversion program with eligible vouchers. So not all Section 8 vouchers are eligible for conversion. However, we do work with the Section 8 homeownership program. We have closed like a dozen of those over the last 5 years. They're a labor of love, but it is possible to use your Section 8 homeownership voucher plus the down payment assistance programs together, where we know those programs in and out.
Thank you.
Thank you, Emily and Kelvin, joining us tonight. The information is really helpful, and our home ownership rate in the area is low, and we really want to our community members to take advantage of these programs and become homeowners and to stabilize the community. I'm sure we'll be in touch with you for the Lower East Side transactions, for the location of the Lower East Side transactions, and maybe we'll bring you back another time to talk about other programs such as Sonny May and those stackable programs that we can use alongside this program. Thank you so much, Emily. Thank you, Kevin.
Thank you.
Well, welcome.
There
Thank
might
you
be public
very
questions.
much. Have a great evening.
Thank you.
Jackie, did you consider that there might be questions from the public?
Oh, I'm so sorry. Totally forget. Questions from the public?
Please raise your hand if you have a question.
No.
Okay.
I mean, the committee members asked a lot of.
I think we answered them in passing.
Yes, and there will be more detailed questions. I think they have like personal problems, issues. They have to reach out to talk directly with you. I don't think they should share those information publicly. Okay, thank you, Emily. Thank you, Calvin, again. Our third item on the agenda is the update on Charas. So Lisa is our representative to the Charas committee, and she and their chairperson, Susan will be our presenter tonight. They will update us about the recent developments. Some of you already know that the properties in foreclosure. They also want to get a letter from the community board addressed to Mayor Adams, reiterating the board's support for the city's acquisition of the building. The draft letter I sent you last night is the original letter with some minor change. The position remains the same as before, and it does not require a new vote. I know there is sentence that is incomplete, and we're gonna fix that after the presentation. Lisa.
Okay, I'll just start, and I'd be glad to turn it over to Susan. Chino is not on the call, is that right, Susan? Because we had talked about Chino speaking, but the bottom line is, Community Board 3 has been in support of returning Charas, the old PS 64, back to its original or its use that began in the 1970s as an arts and cultural community center. And for the past 25 years has been misused and just allowed to deteriorate shamefully by the entity who acquired it from a public auction about little more than 20 years ago. And as most of you probably remember, the mayor, former Mayor de Blasio, made a commitment in 1917 to look seriously at the reacquisition of the building by the city for its return to that use as an arts and cultural facility. He did not follow through on that. So now there was a demonstration just this past Sunday, which Susan can tell you more about. I'm in Puerto Rico, so I missed it. But reiterating the demands and requesting that the new mayor make good on that. So Susan, you want to take it from there?
Yeah, if everybody can hear me. Lisa, you said 1917. I think you meant 2017.
Oh, did I say 19?
Yes.
Oh, sorry. Yes,
Yes,
it's
yes.
not quite that old.
It does seem that
Sorry.
long ago.
It does seem that long. You're right. Sorry about that.
That's
My
okay.
age too.
Thanks all. And I think Chino wanted Herman to give his regrets. He has not been feeling well.
Oh dear.
And he would have had to travel to get to a computer because his computer is not quite working. So he really wanted to rest at home, and we're going to fix his computer so he can Zoom from home and doesn't have to travel to do that, because he's sorely missed. But he was at the demo on Sunday. So we'll be very brief because you've already had a long meeting. We've been waiting for Singer to go to default on his mortgage because he's been in court on this matter since 2019, and now I'm messing up. And so they finally ruled against him in summary judgment. So he is now in foreclosure. The next court date is May. It is not foreclosure and sale yet, but that is coming down the pike. So there's this short window where we really want to reach the new mayor's office. We really want them to work with us and acquire the building for its proper use. And after May, we've already spoken to the lender. After May, they will reacquire the building. They're not eager to send it to auction again. So there may be a possibility to work with them, but this is Madison Capital Realty, and they, they're not known for their generosity. So we really need political support to make this happen, because this is one of our, this is some of the little capital that we have, besides our feet on the ground, which we have, been active for over 20 years and been extremely successful in keeping this issue alive and making sure that the use restriction on the property is enforced, which has stopped it from becoming a massive dormitory or whatever else the developers see a profit in making. So we are working furiously to try to get the mayor's attention. We sent a proposal and a letter from our electeds, and we will keep agitating, but a letter from the community board would be really helpful. We would really like the language that was used at the close of the last resolution from 2017 on this issue. I think it's a little more precise than the last sentence of the current draft letter. But as is, it's still great. We just, we're really appreciative of your support. And just to say, the rally, even though it was a light snow and cold, it was a fantastic turnout. Carlina, Brad Hoyleman, and Harvey Epstein were there, and Rosie Mendez, our former council member, and it was a really wonderful and very well attended demo. And we hope Channel 11 is interested in doing a story. We're hoping to do a spot there to try to keep it in the press.
So my suggestion is for a minor modification to the draft letter that we saw, the opening sentence is really the crux of it. And I think it should say Community Board 3 is in strong support of the reacquisition of by the City of New York of Charas.
Lisa, excuse me, Lisa. Linda, can you show pull up the letter?
If you let, I'm not too good at screen share. Do I have the right to screen share?
I think Linda can do it. This is a quick fix. It's not like we have to do a lot of editing, I think. So
okay, I mean, let's
I'll
see if
put
I
the
can.
language in the chat, or you put the language.
Yeah, allow me to screen share, Linda, and I can. I'll put it up.
She already made you a co-host.
Okay, great. Okay, this is what can you see it?
Yes.
So I'm saying the opening sentence would say Community Board 3 is in strong support of the reacquisition by the City of New York of Charas Old PS 64 located at 605 East 9th Street for the use of the building as an arts and cultural community center. And then the first sentence of the third paragraph was just not edited properly. So it would now say, then Mayor de Blasio in 2017, not 1917, at a neighborhood town hall stated a commitment to return this building, et cetera, et cetera. So everything else is the same as the letter you saw. So
improvement.
We don't need to vote, but is there a consensus that this is fine and that this letter should be sent?
It is fine for me. If you guys have any opinion, please say it now so we can move. Dominic.
Yeah, sorry. So just, can you clarify, at least I may have missed it, but the last paragraph doesn't look like a red line change and it says in the last few weeks. Linda, can you scroll down, please? Or whoever's controlling it.
In recent weeks, the current owner was declared in default.
That's just totally new, right? That obviously wasn't there before.
That obviously was not there before, but it's not, substantive change in any way.
Okay.
Or position.
Thanks.
Okay. So no opposition. We're gonna send out a letter.
Jackie,
yes.
No opposition. The clarification is, did we do the improvement that Susan asked of the last paragraph or no, Lisa?
I don't understand what you are talking about.
Oh, I think Susan is okay with the change in the first paragraph. That's very clear, right, Susan?
Yes.
Yeah, if it's in the first, I'm fine with that, and so it doesn't have to be in the last.
Yeah.
Okay.
Thank you.
All right. So we're just gonna send out this new version with the same position. Thank you, Susan, and thank you, Lisa.
Sure.
Okay. So our third item on the agenda is the Green Questionnaire. Maya cannot make it to the meeting this month, and Dominic will present the update. So Dominic, do you need to show the documents or you
Yeah,
want to just talk about it?
I'll do both.
Okay, so Linda, you may have to make Dominic a co-host. Thank you.
Done.
Okay. So give me a second here.
I think Lisa has to stop sharing first.
Oh,
Or I
Thank
can,
you, Lisa.
looks like I can kick her out.
kick me out, kick
Yeah.
me out. I'd be fine with that.
Thank you, Lisa. Thank you, Susan. Howard. You know, when we call Susan, I keep thinking about Susan Spencer.
No, there's a lot of Susans in the world.
Okay. So yes, there's two documents. It kind of doesn't matter which order here. Can you see?
Sorry, interpreter switch.
Go for it.
I can see you, Chris,
Do the share switch at the same time.
but Vincent's not here yet. Where did Vincent go? He got up. You can go ahead with your meeting and I'll stay on until he comes back.
Okay. All right, great. So what the document that I'm showing here, this is an iteration on, well, I know last time we were showing the list of questions, and we talked about how, you know, we would reformat things so that it was easier to do the scoring. So what Maya did is she went ahead and she took, she basically made this workbook so that this wouldn't be something that's given to the developers. It's really more for, I mean, it could be, but it's really more for the committee members to understand if the developers are responding to the questionnaire, you know, what are these like certifications and what do they do exactly? So so this is, you know, this is just helpful for the board members to understand what the scores are for each of the certifications. So what she did is basically they all follow the same format. It's, you know, what is the certification, how it works, you know, like that there's these different kind of point levels and, you know, what those levels, you know, how many points someone needs to obtain the level. What are the implications by being certified? And then what are the areas that the score really impacts and, you know, categorizes. So, and then she puts a link to the, you know, to the certification itself and explains that. So this is, you know, if I just scroll through, you'll see that, you know, there's a page for each of the types of certifications. So of course, I'm not going to read through it all, and everyone got this, but I thought this was really simple and helpful, you know, for the committee members. You know, once we start doing the questionnaire, you know, if a developer says that they, you know, are following a certain certification, you know, the committee would be able to look at this workbook and get a good, you know, snapshot and understanding of, you know, of what that certification, you know, really is measuring and, you know, what it means. So that's the workbook. Any comments on this before I switch to the questionnaire with some resiliency questions on it? No? Okay. All right, let me see now if I can just switch to this other one. That didn't change for y'all, did it? Oh, it did. Okay. Just hiding. Okay. So the feedback that we got in the last meeting was that we should have, a better balance of sustainable development questions and questions around resiliency, which of course can, come hand in hand. But this list of questions here is really, it's really focusing more on the resiliency aspect. And it's a list to start from. It's not, we don't have to ask every single question that's in here, because we're also going to want to add it to the, to the more sustainability type development questions that we had started looking at last time. But I don't know if anyone had an opportunity before the meeting today to take a look through these questions. But what Maya did is she, well, let me actually find the note. Should pull this up first. Because she pulled these questions from a number of resources. I just want to make sure that I got them all. Okay, so she pulled from on the community board site, there's a lessons learned from Sandy document. There's also the district needs statement. There were some resiliency questions that were in the Green Communities certification that, that we talked about at the last meeting. And then she also looked at the Lower East Side Ready emergency plan. And pulled in, some questions around that as well. And Damaris and I actually spoke Friday night because I wanted to make sure, as a Lower East Side Ready organization, that we were kind of picking up on the right things as far as resiliency is concerned. So she and I actually walked through this this document, and she pointed out some good things that we've updated here. Like for some of the questions, they were very kind of nice questions in a way, but it wasn't really clear, like what are we trying to find out specifically? Like, is it like we need to ask almost more direct and leading questions that would help inform us of how we think, whether or not we think it's actually a good resiliency strategy of the developer. So Maya's actually, and I had given Maya some other feedback on Friday that she hasn't updated yet in this document, but the the feedback from Damaris and what we talked about, she is still gonna go through here and really kind of make sure that the questions are a lot more direct. But I think this is a really good start for where we are. So yeah, so hopefully if everyone can, and I don't think we want to go through every question. Maybe I'm wrong. Let me know if I'm wrong, but I don't think I want to go through every question that's on here right now. But I definitely would like to get feedback. And if you did read through it before the meeting and have feedback now, I would love to get that feedback now.
Olympia.
Thank you. Yes, so I had a chance of quickly reading it, and I had followed up with you after the meeting the last time. I think this is definitely in the right direction. I think it's great, the little summary of the programs that she created. And in terms of this part of the questions, so the last time I talked with you, and then you didn't announce it today, but it was after you sent us the housing questionnaire that the CB3 is using. And I had suggested that this thing doesn't become anymore a standalone resiliency sustainability questionnaire that we give to the developers. But because of the way the housing questionnaire is structured, where it has different sections, that could be a section within that same questionnaire. Is this the path we're pursuing?
Yes, that was the thinking. This, when I said earlier, like, we don't have to ask all these questions. We just want to get all these questions out there. Like, this is kind of the universe of questions that we could ask. Then we can whittle it down.
Great.
Yeah.
So
Yeah.
because exactly this, what I would say is I love these questions, but I felt there were a bit too many. And also right now, they're not in a hierarchy. So some may be more relevant for this community than others. And also the entry point of some of these questions is from a different perspective. It is, so basically, like, how do you are, you can see that they're not written from the same point of view, every question, because he's copying and pasting the concept from different places. That's where we start when you have a first draft. So I think it's a great progress from where we were, but I think it needs some editing and prioritizing and cutting down. And, if she wants to do it on her own, if she needs any of our assistance, I'm happy to help, because this is definitely something, that is progressing really well.
Okay, yeah, point very well taken. And I'll give that feedback to her. I guess the question is, what we can do, maybe the next step, we could work on that some, but maybe the next step is putting it all together, getting out the document well before the next meeting, so that we can determine as a committee, like, this question is, we don't need to know this right now, or we don't need to ask this right now. This is an important question for us to be asking. I think I want to be mindful of using our meeting time wisely. So I could potentially, Jackie, it's up to you, right? But if people want, like, if we get the document out and we get feedback from folks where, they can kind of say, like, I think this is really important, this is somewhat important, this is not important. And then I could kind of, along with Maya, like, we could sort of say, like, we sort of synthesized everyone's feedback, and this is kind of what we're looking at as the most important questions that we want to ask. Is that maybe something that y'all would want me and Maya to do next?
I think this is a good suggestion, and in fact, you have done that before to create your previous draft. So I think that should be the way to go. I guess my question to you is that, if I remember correctly, next month is the last month of the Maya's not internship. This is her
fellowship.
Fellowship. I'm sorry, fellowship. So if I remember correctly, next month is the last month. So we have to finish this at the next month meeting. Just like committee members need to be mindful about that.
Yeah, I'll have to follow up. I think she may be able to possibly go to April, but I'll have to confirm that with her as well.
And then we can bring out the original housing. After this, we can bring out the original housing questionnaire, and then start to talk about other priorities that we briefly discussed in previous months.
Okay. And the other thing I forgot to mention is, once we do this, we also, Damaris brought up this, it would be helpful, like, there's certain terms that are in the questions that would be good to have a glossary for committee members. So once we settle on the questions, if there are terms that the committee members don't really know, then we can create a glossary based on that also.
Okay, thank you. Any other questions from the committee? By none. Susan Howard.
Yes, I don't want to belittle the great work you've done, but just from a committee member standpoint, I'm just wondering, as a suggestion, that you might consider doing like checklists because it might give you a very quick snapshot of what they are actually going to include in some of these areas, and maybe based on some of the things that you would like to see in these areas, things that you are supporting in terms of ecosystem services, evacuation measures, power generators, etc., like green roof or whatever you call white roof or tree planting or whatever it is. That way, when you're looking at applications, you can see check boxes of whether or not they're actually providing these things or thinking of providing these things, and knowing that you are looking to them to potentially provide these things. And it, it may give you a easier read in the long run, but that's just a suggestion.
Yeah, no, Susan, actually, that is because you were on the meetings the last couple of months, right?
I was not.
Yeah, so this is just a piece of what we're looking at. So there was actually we kind of have like a matrix that we're using. That's what that first document was related to. And then what we're talking about adding this is that there is like a questionnaire that exists already for housing, and we're looking to add on to that. And I wasn't really scrolling through this really fast, but the things you just mentioned, right? Like about power outages. I have a question here, we have a question here about green roofs. So next, what the committee needs to do is kind of figure out, like, if we were doing like check boxes, or like what are these things that are most important to us. So thank you. Your feedback is definitely in the direction of where we're thinking about going with that.
Thank you. Thank you, Dominic. You can stop screen sharing. Okay. The last item on the agenda is to report from NYCHA Subcommittee. So they had a meeting this month, and then they talk about outreach and meeting formats, and other updates include 45 Allen Street is in need of support to establish a full TA, and Rutgers Housing needs support from a traffic sign. Baruch Housing needs support with law enforcement responding via PSA 4 and 7 precinct, and various committee members were concerned about the ongoing construction and the safety in Baruch House, Jacob Rees, and Lillian Ward. To be honest with you, I was not at the meeting. I couldn't make it this month, so I may not be able to answer your questions. But you can watch the video, and if you have more questions, you can let me and Alicia know, and we'll try to address that. So that is the update for the NYCHA Subcommittee. All right, thank you. Any other questions? If no, then we should wrap this up.
I mean, I guess my question about the housing thing that you said, so when they report to us that they need assistance with the tenant association, etc., I see, we have Steve Herrick here. Like, what do we do as CB3? Connect them with tenant organizing places that can help them, or what?
So I think, first of all, we have to, I think we better watch the video first, right? Because we don't know, I don't have all the details. And if Damaris had anything to chime in, you can do so now, or you can, I'm sure Alicia is thinking about that. I'll defer that to Alicia. Oh, Damaris, do you have anything to add? Like, if people want to form their TA, full TA, what do we do? I think they talk about support.
I'm sorry. I stepped away for 1 second.
It's okay.
And when I came back, you said my name.
So the question is that 45 Allen is in need of support to establish a full TA, and as a community board, I don't know if what kind of support we can give them, or I thought a lot of like local Lower East Side usually support tenants to form TA, right?
Yeah, we do, and if they want our support, they can give us a call. I can put our phone number in the chat. They can also send us an email, and then we can assign somebody to work with them and help them organize their resident association.
Okay, thank you, Damaris.
Thank you.
Any other questions? We're just gonna wrap this up. Thank you. Do we have a motion to adjourn?
I have a question. I have a question. This is
Who
64
this?
Essex Street. This is from 64 Essex Street, Rosemary Hamid. I noticed that you went through the whole guidelines, but you never mentioned anything in reference to 64 Essex Street. And here's one of the things that I would like to ask about, since we were talking about some of the resiliency planning and so on and so forth. How come the 64 Essex Street and 50 Norfolk Street are no longer within Zone 6?
What is your question again? I don't understand. The committee members, do you understand the question or just me? Can you say the question again?
You were talking about the resiliency subject before. And in the resiliency subject, we're supposed to be Zone 6 in case of any emergency, in case of any floods, and so on and so forth at 64 Essex Street. But when I go onto the website doesn't have us in any zone at all. We're no longer Zone 6, neither is 50 Norfolk Street. So I'm wondering, why is it that we're not any longer in Zone 6? I still live here, and we got a lot of people that live here.
All right, what website are you looking at?
I think maybe she's talking about the flood zones.
That is what she's talking
Exactly.
But there's no, what is the flood zone 6? I've never heard of a flood zone 6.
They're just the city's emergency zones. So it would be helpful to know which website you're getting your information from. And it just
New York City.
Yep.
From NYC.
I sure am.
Yep, the city's website shows that. Sorry.
You
my
put
dog's
the
barking.
Can you let Mike go, please?
The city's website shows that none of Allen Street is on the flood zone anymore. So the flood zone maps are changed based on data from the federal government and from the city, and for whatever reason they must have reassessed and found that there is a very, very low chance, enough for it to not even be included in a flood zone. But we obviously as a community board didn't make that decision.
That's right.
Thank you, Michael.
Well, here's the thing that, excuse me. I wasn't talking about Allen Street, 45 Allen Street. I was talking about 64 Essex Street, which is right next to the market.
Right.
Okay.
But either way, ma'am, what we're saying is that.
And then the market is on the zone. The market is within the zone.
It's not on this map from the city, from the flood hazard mapper from NYC City Planning. No part of Essex and Delancey, really no part of Essex Crossing is in the flood zone anymore. Or I'm not sure if it was before these were updated, because I think if anything, the updates just expanded the reach of the flood zone.
Thank you, Michael, and thank you.
When did this happen? Because the truth of the matter, I just went on there yesterday, and it's still saying only 64 Essex Street and 50 Norfolk Street, which is where the elderly are living at.
I'm sorry, ma'am. Can you provide your name and also your email in the chat, because this topic is not actually on our
agenda. I can't
agenda.
provide anything. I have no video. My smartphone doesn't go that far.
Jackie, maybe we can give her the contact information of the district office, and if they have an issue because it's a senior housing and they have concerns, maybe Susan can connect them with the right agency to discuss this.
Yeah,
It's not only senior housing. We were talking about, we're also talking about the NYCHA building right across the street, 64 Essex Street.
Right, we're saying for all of the buildings that you're referencing, you can bring those up, because this board doesn't make those zones. This board doesn't make that decision, but the city's Office of Resiliency and NYC Ready and other agencies are the ones that determined what the flood maps and the zones are. So what we're recommending is to give you the phone number for our district office so that our district manager could possibly give you the right contacts for the right people at different agencies that you can talk to get your question answered.
And Linda just put the contact in the chat, so you
She
can
can't
take
see
that.
she doesn't
Oh,
have
I'm sorry.
video.
I'm gonna read the number to you. It's
Well, can we
212.
make sure she has a pen first before we start reading it off?
Can you
Thank you
take
so
down the
much.
number?
Thank
Are
you.
you
Wait,
able
hold up.
Okay.
Hold up one moment. Okay, first of all, who will I be calling?
You just call the number. Somebody will answer your call.
It's
and then you can
Community
ask-
Board 3
Yeah.
is who you're calling.
Oh, that's where Susan is at?
Yes.
Yep.
Well, I have that number.
Okay.
Okay.
All right. Great.
So I'm
Thank
good.
you. Okay. Great.
So Susan,
Jackie,
he
what's
can hopefully put you in touch with someone who can answer this question. And if you have any concerns because you believe there is reason for flooding, etc., just let them know. They don't know everything all the time.
Jackie, just for reference,
There's always some type of machine sucking something out of here, so there's some type of something going on. So
Thank
that's
you.
why I'm
Thank you,
wondering,
ma'am.
why is
Thank you,
it that
ma'am.
we no longer on there?
Yeah, I
Trevor?
understand.
no,
Thank you.
just
And
for
right
re-
across the street, the power went out too, on top of that.
Trevor, what is your question?
Thank you
or
very
comment?
much.
Thank you. Thank you, ma'am.
nothing, Jackie.
Thank you. Do I get a motion to adjourn the meeting?
Motion
Yes.
to adjourn.
Lisa, can you take the, can you
Attendance.
do the roll calling, please?
I don't have any.
I can. Hold on just a second. Jackie, I take
Yes.
it you are present. Linda,
Present.
Jonathan, Chu, Herman,
Present.
Trevor,
Present.
Lisa, present. Olympia,
Present.
Michael Perlis,
Present. Thank you.
thank you. Damaris, I take it you're there.
I'm here.
Anisha,
Present.
Dominic,
Present.
and Steve.
Present.
That's it, guys.
Thank you. Thank you
Bye.
all. Good night. Thank you.
Bye.
Good night.
Bye, everyone.
Bye.